Most homeowners don't realise they can own their home in under a decade without sacrificing their lifestyle or paying more than what they're already paying. See, the way the banks give you a loan is they lock you into a 30-year loan, and then a couple of years down the road, they'll show you a nice new shiny rate and maybe some cashbacks and things like that to convince you to refinance. And when you do that and they refinance you to a new bank or a new lender or whatever it might be, they reset your mortgage back to 30 years. Even when you're doing things like renovations and debt consolidations, all they do is extend your loan term on and on and on. And that's not what you want. What you want is a strategy that's designed to pay off your home loan fast. And in many cases, we can do this without even changing the amount that you're paying now. So if I told you you could own your home in, say, 10 or 15 years, maybe less, maybe more, depending on your situation, without paying more than what you're paying now, just by restructuring everything into one repayment and making sure that we keep making the same amounts of repayments, would that be of interest to you? I mean, it certainly would be to me. No one ever taught me that when I was younger. I just did what everyone else did. Went out, got lots of debts, lots of car loans, credit cards, all those kinds of things, and they stack up. And what often happens is because you've got so many repayments going on, it becomes impossible to get ahead on any one debt. When you've got 6 different repayments and your cash flow only allows you to make the minimum on each, but you can't pay any more. And then what happens when you need a new car? Well, you can't save up money, you can't afford to pay for it from your own savings or your own cash flow. So of course we have to go out and get another car loan or another credit card to buy a TV or whatever it might be. And that's the way the banks are conditioning you. They want you to take out all these different debts and different loan terms and not really have any control over your finances. So what we do is we help homeowners to restructure that. So it's one repayment and nothing else is coming out except for the home loan. Now you can imagine if you had, say, a home loan of about $4,000 a month and about, let's say you had another $3,000 or $4,000 a month in repayments to car loans and credit cards and personal loans and afterpays and all that kind of stuff, right? Imagine if you wiped all that out and put that $7,000 a month onto just one loan, or $8,000 a month, or whatever it might be. So now, instead of just paying the minimum on your home loan and all these other debts, you're now doubling the repayment on your home loan, or paying a lot more than the minimum. So you can imagine what impact that might have on the term of that mortgage. And by doing this, you're not actually spending any more than what you're already spending money on. Like your repayments remain the same, but we're doing it in a way that is designed to get ahead and pay off your loan faster. Now, a lot of people say to me, well, if I do that, doesn't that mean that I'm now, I'm not any better off, I'm still paying all this money each month? Well, no, because one, it's paying off the loan faster, but two, it's also building up your redraw, right? So that means anything you pay above the minimum payment actually sits into your redraw. And that's money that you can take out whenever you want it. Now, we certainly don't encourage you to take it out all the time, but if you're paying an extra, let's say $4,000 a month, right? After a year, how much is that? That's over $40,000. So let's say you needed to get a new car or your engine blew up. You don't need to go and get a loan anymore. You can now just take it straight out of your redraw. And yes, of course, that'll put your plan back a little bit, but you keep going with the strategy and okay, it might put you back a couple of years or maybe a year, but that's all. It's not putting you back into another 7-year loan term. It's just extending all your debts and making life harder and harder and harder. And yeah, there are even lenders that can do this with things like overdue business taxes and business debts as well. But you want to make sure you get the right lender for those types of things. The important thing to note is that every lender is very different. And they'll look at things like late payments on your statements. If you've had a couple of late payments here and there, that could impact on their decision to actually lend you the money. What's on your credit file? But then it's also good to know that different lenders look at things very differently. So where one lender might say, no, sorry, you've had a few late payments on a couple of credit cards and personal loans, other lenders might welcome you with open arms. And this doesn't always mean you're going to pay more for those lenders either. They're just different ways they assess loans and different policies. So if you find that any of this relates to you, if you're sick of paying multiple repayments, feeling like you're getting nowhere, and just paying an endless amount of money to the banks rather than putting it in your savings or being able to make a dent or improve your lifestyle, then I invite you to book a call with me and my team. We'll have a look at your situation and work out what we can do and how we can apply this strategy to you. We have about 10 different strategies that we use. This is just one, right? So when you get on our call, we'll look at your whole situation, we'll work out a strategy for you, and we'll show you the numbers and show you how that might impact your mortgage and your lifestyle. So, like I said, book a call, have a chat with us, and we'll see you there. Thank you.